Adani stocks are tumbling. The world's third richest Mr. Gautam Adani has lost those spots as the Adani Group is in skyfall. He doesn't even feature in the top 10 now. Do you want to know why and how this happened? Adani stocks are tumbling one account of its face-off with the Hindenburg report, painting the group's stock ticker red like blood. Now this is a David versus Goliath battle. And the Goliath, Adani Group, is big enough to sport $280 trillion or 24 lakh crore valuation late last year. From that, a few trading sessions and we saw it shed over a whopping 8 lakh crores. So there's a lot to unpack on what exactly happened and how your finances can coast through this mega event. So hit the like and subscribe button and let's go directly to the analysis. Chapter 1. Adani Group Stocks, a review of the fall. So which stocks are part of this giant group? Let's look at a list and respective loss of value from recent peaks. The titled runner is Adani Enterprises, which has lost about 50% in the last 5 days as of 2nd February, and came down to 1600 rupees range from over 3200 rupees. This is the core business company and hence it is affected the most. The next comes Adani Green Energy, which has shed 36% in the same period. The next is also a major part of Adani's core business, which is Adani Ports and SEZ, which has fallen over 30%. Adani Transmission is 27%, while Adani Total Gas is a bigger loser with a 44% red mark. Adani Power as a power production company has been relatively left aside with an 18.5% fall, and lastly, Adani Wilmar has lost the same as Power. One must also take note that almost all of these stocks have hit respect circuit limits and trading through the day has been limited. These are very sharp falls, and hence, the exchange regulator laid limits on the fall have curbed any further nosedives in Adani Group stocks. This information is important for retail shareholders who might not be willing to hold any longer, as hitting circuit limiters on opening means they cannot get out and sell their holdings. But individual finance is a matter of the last chapter. First, we got to break down why these stocks have fallen. This is not a political engagement or commentary, but rather an objective breakdown of the events of the last few days. The spark to this wildfire was given off by the Hindenburg report. Last month, Hindenburg Research published the findings of a 2-year investigation, claiming that Adani had engaged in market manipulation and accounting malpractices. The report came 2 days before Adani Enterprises' 20,000 crore rupees follow-on public offer (FPO) that opened for subscription on January 27th. This led to a to and from face-off between the two entities, engaging in allegations and replies to each other's commentaries. So, what exactly did the report say? Let's get to know it. But before that, if you're liking this video so far, drop a like and press the subscribe button for more such content. Chapter 2. What is the Hindenburg report? First things first. Who exactly is Hindenburg Research? Hindenburg Research LLC is an investment research firm with a focus on activist short selling founded by Nathan Anderson in 2017. One can simply say that Hindenburg has made its job to blow whistles on shady financial practices in listed firms, which is the activist part of their bio. However, no need to assume some altruistic purpose behind such an activist position. They aim to profit from this. They take short positions in such stocks, meaning they short sell or bet on the stock going down, and however much the stock falls becomes their profit. So what does their report on Adani Group say? Now, Hindenburg has spent no time on subtleties, and gone with this as their title for the report. How the world's third richest person is pulling the largest con in corporate history. So you know, they're going to lay some very serious remarks on the Adani Group and more so, on the founder Gautam Adani as the person at the helm. Let's look at some of their allegations verbatim as given in the report. Number 1. Gautam Adani's elder brother, Vinod, was a group executive also implicated in the diamond and power equipment scams. While Adani now denies Vinod's involvement in the group outside of being a shareholder, in reality, he operates a vast empire of shell companies that funnel assets through Adani Group companies. Here, the report invokes the involvement of Adani family members in previous scams to indicate their current role. Number 2. Stock parking. Offshore funds and shells tied to the Adani Group surreptitiously own stock in Adani-listed companies, seemingly in blatant violation of SEBI exchange rules. The report names many Mauritius safe haven-based entities to be owners of Adani stocks and push their prices up. These shell companies are ultimately owned by Adani family members, the report alleges. It says, suspected stock parking entities accounted for as much as 30% to 47% of delivery volume in Adani stocks, reinforcing concerns of circuitous trading and market manipulation. Nonetheless, the report also points out the outrageous valuations, saying, even if you ignore the findings of our investigation and take the financials of Adani Group at face value, its 7 key listed companies have 85% downside purely on a fundamental basis, owing to sky-high valuations. Hindenburg has disclosed that they had already taken a short position on the group stocks. But this report was not left unscathed, as Adani soon released its own 400-plus page reply to the 100-page report that went viral. Adani's reply gave information on the group's leverage being covered by assets sufficiently, and that they were following all regulations. Thus, there has been a lot of to and fro between the two parties. Briefly, Hindenburg alleges overvaluation by insider stock parking and using over-leverage and promoter share pledging to inflate already inflated group stocks. While Adani Group has remarked the report to be baseless and suspiciously timed before its 20,000 crore rupees FPO, it also termed it to be a concerted attack against India and its future development. So who do you believe is correct in this battle, Adani or Hindenburg? Go type your opinion in the comment section. Chapter 3: Global and Local Repercussions. So what are the impacts and repercussions of this battle? First of all, as evident, Adani's reply to the Hindenburg report clearly did not work, as we saw the bloodshed of the group stocks in just the last 5 days of reporting. However, a critical view is also making rounds in the market, that there are other possible factors contributing to the fall. Fears of global recession have placed international emerging markets at the mercy of foreign institutional investors, or FIIs, who have been nut sellers in Indian markets. The yield curve inversion has indicated that large investors are going to park funds in safer assets like government bonds, especially US Treasuries as safe haven assets. Secondly, the overvalued nature of the Adani stocks did not help the cause of saving face. High valuation in just a 1-year price spike made it easier to erase the returns. Another factor is the low market free float of Adani Group stocks. Even Hindenburg has commented on borderline delisting level 75 to 80% promoter holding in the group stocks. This means that there is a low supply of shares available in the market, and even a small amount of selling will make a huge oversupply and a great fall in prices. How did the broader Indian market take this event? It was a funny picture for outside viewers, as the Sensex index of the top 30 companies has been insulated, while Nifty of the top 50 has Adani Enterprises and Adani Ports SEZ stocks as constituents. So, when the Indian government released the budget on the 1st of February, which was largely dubbed to be positive, Sensex rose 0.27%, while Nifty lost 0.26%. Adani itself had to make ends meet to control the damage by getting major investors for its FPO, which could not be subscribed at over 3,200 rupees, when the market prices are over 20% lower. However, it later prudently called it off after the large investor support, so that it defended the image of the group and its shareholders' trust to an extent. So, there are mixed reactions in the local Indian market. But it's also true that the factors of the Russian-Ukraine war, yield curve inversion, and fears of global recession have also played for these indices, as Nifty is down 3.23% in 2023, while Sensex has lost 2% in this period. There have also been some global commentaries and the impacts of this fallout. Recently, Credit Suisse declared Adani bonds to be ineligible as collateral for margin lending. This is cited as a major reason for the ongoing fall in stocks, as such action remarks an untrustworthy credit rating for the group. The future can be bleak, as a report has said that $1.5 billion in outflows are likely if the group's weight in the MSCI index is halved. Chapter 4: What should you do? So, what should you do in this environment? Buy, sell, or stay out? The first question is, are you an investor in these stocks? If the answer is affirmative, then you have reasons to be worried. Large holders like LIC will still have profits as they bought at low prices. If that's the case with you, then it is fine. If you're looking at large losses, there are 2 ways to go about it. Number 1, wait and watch. Wait for the clouds to clear up after the storm, and then decide to sell at that price or stay invested. Number 2, go long. Average the price when the stocks dip to minimize the losses and hope for the best. There may not be a stop loss or selling now an option, as stocks are going circuit limit, and even if you could sell, you could be marking huge losses, so have some patience. If you're not an investor in these, there are reasons to be for you too. You will have to check your exposures to stocks that are exposed to the Adani Group. The market in general is in a cautious place and looking to go down on global cues, so you too need damage control. For example, the nifty PSU Bank Index has tumbled over 9% because people fear PSU Bank, which has major exposure to Adani debt, may have to face default in the worst case scenario. So check all of your holdings and be defensive until the storm passes over. The event is providing valuable lessons in investing for new entrants, and a small amount of loss today may go along in terms of big learning for your future investing. So to condense, Adani Group is a giant conglomerate with a diverse range of businesses, which is termed too big to fail, and the Hindenburg report has pushed a pin in the foot of this giant. Irrespective of who is correct, which will become clear as better evidence comes out, we as investors need to be cautious. There is blood on the streets and global indicators are laying heavy on positive growth and budget news at home. Therefore, being defensive in approach and studying the development of the case can help long-term financial goals. Don't forget to comment your thoughts on the Adani case. Press the like button if you didn't and subscribe to the channel for more such content. If you want to know more about defensive investing by dividend income, then visit this video to why these 6 dividend stocks are poised for beautiful upcoming.